landscape, catering to liquidity providers and smart traders who want to benefit from low fees, farm DeFi highest APRs, and trade effortlessly on SmartDex.io.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's a few minutes past midday here, making it just gone at 1100 UTC. Apologies, we've had some technical issues this morning and our stream had been delisted from YouTube. So I'm not really sure if I managed to scramble out in enough time to get everybody aware, because I only realised myself a few minutes before we went live. So it might be a little bit lightly attended, this one, but hopefully we've got some people coming in. So if there's any new people on the stream today, just to let you know that normally on a Wednesday, we focus on our altcoin session, but that is also open to traditional market assets as well. We cover a lot of FX and we can also do legacy as well. Kelly, there she is. Okay, Kelly, as long as we've got you, then we're good to go. We're good to go. Lovely Kelly Barker, all the way from New Zealand. I was just saying, Kelly, I was really worried. I got on. Funny enough, I finished just with a mentoring student of mine who's a fellow New Zealander like yourself, lovely guy called Tony. And then as I came across to go live, I realised that YouTube had somehow just delisted the live show. So we didn't have a link. No link had been sent out for it like it normally goes out through a scheduler. And the last few weeks have just been really, really turbulent in terms of kind of my attendance. I've had a bit of leave booked in, some family stuff. So I was really desperate to get on the stream with everyone today. And I came on and couldn't find it anywhere. So I've had to kind of make it myself, which obviously we can appreciate. I'm not the most technically gifted person when it comes to that kind of stuff. Erica as well. I'm so glad to see you guys have actually made it onto the stream. Really, really sorry for the horrendous lack of notice on that. But yeah, caught me by surprise as well. So how are we doing, everyone? Is everybody well? How are the markets treating everyone? I think it's really interesting to see what crypto is going to kind of do today after, we had, pretty nice day yesterday. But yeah, I mean, really kind of counter-aligned with what the DXY were doing, with what equities were doing. Obviously, we're moving into a really kind of news-driven period here as well, guys. So do remember to keep your eye on the economic calendar, and especially, obviously, FOMC, which is just a really big catalyst for all the markets. And hey to you as well, Erica. How are you doing? So I don't know if you guys have got any specific alts that you wanted to look at, or if you wanted to maybe focus on some FX pairs today, or you wanted to go over some more education material. But do let me know. I've obviously just got a chart up at the moment with the session breaks on for ETH. Yeah. So as we're looking at that on here, want to kind of zoom this out to a daily and see where we are. We can just see from that chart immediately just these big periods of consolidation and chop that we've been in. So as we look at this at the moment, yeah, awesome, Erica. I mean, if you want to look at that, we can do a little bit more work on what we were looking at before when we're talking about our bias, looking at how we want to kind of get reads based more off of our highs, lows, obviously intermediate term highs and lows, and then looking at areas sort of like our order blocks as well, which can be a good point to push out. I know we don't do tons on order blocks, but kind of getting our bias from our fair value gaps, getting our bias obviously from order blocks as well. But I do tend to use order blocks more like sort of when price is in motion on the lower time frames, looking at how price is respecting those, obviously fair value gaps and order blocks to keep ourselves within the trend. But there is a little bit of a sweet spot in terms of dropping onto the two lower time frames, especially on highly volatile assets like crypto, because you just get so much noise, right? So, okay, let's look at this, because this is a good example, right? Now, if you're basing your kind of bias on traditional kind of market structure, yes, we're clearly bearish, lower lows, lower highs. We've kind of come up and taken out this high here at the moment. So what I'm normally looking for is, for example, when we came into this situation, we've obviously had a big drop and we've left this fair value gap, right? So I always want to ask myself two questions, right, to start with, which is, where is price heading? Yeah. As in, have we taken an old high? Have we taken an old low? Have we taken liquidity? Where's price delivering from? Okay. So in this example, this is nice and clean, because what we have here is we have a bearish fair value gap. Yeah. We can see price drawing into this. We get our reaction. We ultimately then get this where it draws up higher into this, yeah? And then as we come to rebalance this fair value gap, we're then looking for how price reacts. Now, what's interesting here is on a daily scale, I do like using order blocks, fair value gap, sorry, in the same way that we do on the 4 hour. So before we set this bearish candle here, on the close of this candle, this is a bullish fair value gap, right? Now, we've also closed above this bullish order block, yeah? So we've got the down close candle here, had that close. So all of a sudden, we can consider that price is kind of changing its state of delivery. Why? Well, only if we get a bullish reaction inside this fair value gap, okay? Now, it's not always about being right. It's about what we do with that data. So as we're monitoring this area here, as price comes back into it, yeah, we can see that we don't get the setup. I'd be very, very surprised if we drill into the lower time frames, right? If there were any kind of bullish reversal setups in there at all. Ultimately, what happens? We close below here, yeah, making this an inverse fair value gap. And then we're looking to chase down liquidity below the clear and obvious low or high that follows. All right. Hey, here we go. Nip, my friend, how are you doing? Whack as well. Brilliant to see you on. Yeah, guys, I was just saying to Erica and Kelly here as well, apologies. We had a bit of a technical issue with the YouTube listing this morning, so none of the session went out, none of the reminder, none of the posts or anything that were all kind of preset. And I just finished a session and then came onto this a few minutes before and had to kind of scramble something together. So it's actually a miracle that any of you are here. So I do really appreciate your perseverance and certainly patience. Now, we were just discussing the idea of using this as a little bit of an education-focused session. So something I'd like to know from you guys with this kind of style, or certainly the way that I trade, and questions outside of that as well, if you're interested in moving averages, bits and pieces like that. But if there's anything that you're really either struggling with, or there's an area that you would think, you know what, when I get to the chart, I've got a really good read on my bias, but I really struggle to execute, as an example, right? Or, I find that, I kind of misinterpret fair value gaps, or I don't really understand session timings or the kind of key areas for me to trade. Because if we're looking at the kind of big picture, we've ultimately got price and price action, yeah? And then the other thing that we need to factor in is time, yeah? Because it's all well and good sitting and looking at this chart and saying like, okay, we took out this high here, we created this fair value, violated that, we chase it down to this low. But there's so much information within this candle. And finding out whether, you live in New Zealand like our lovely Kelly does, or if you're in London like me, or if you're in, Singapore, or, wherever you are in the world, there'll be different FX pairs that are going to be more favorable for you to trade. There's going to be different session timings that you're going to want to trade. Are you looking to trade Asia? Are you looking to trade London, New York, stuff like that, right? So that's where it comes to getting into the kind of details and the minutiae. And you're absolutely right, Erica. You are the old school soldiers of this channel for sure. So once we've done this, right, and then look, we can see that price is consolidating here. We've had a large drop, and it's very, very often commonplace to see price consolidate, yeah? Now, you could look at this in some ways almost like a power of three move. We have the consolidation, we have the manipulation, yeah? And then we have delivery, yeah? I know, do you know what I was just thinking Hans is missing today? He literally never misses a session, does he? I think it's probably the fact that my poor getting this thing out with any kind of notice. But yeah, I feel really bad. Hopefully he kind of makes it on. If not, I have to pop him a message after this. make sure everything's all right. So what do we then do when you get really, really kind of unclear price action like this? Now, when price consolidates, look, again, we've had, it could be load shedding. Yeah, I've been to South Africa a fair bit, and that is a nightmare. Bless him. I'll definitely drop him a message after this one, guys, for sure. Make sure our old friend's doing well. So the issue is that when we zoom out, price spends most of its time consolidating rather than trending, right? We look at this kind of daily chart in here, and we've got kind of all this noise, but this is an area we highlighted previously, right? Consolidation, manipulation, expansion, right? Now, let's just clean all this up. Goodness me, that's how long ago that was. Let's just hide those for a minute. right? So I think a lot of people can get confused sometimes in terms of time frames. I see a lot of people spending a lot of time on lower time frames, getting chopped up quite a lot and kind of saying, God, why the hell, this order block should have been respected, this fair value gap should have been respected, etc. Right? What I would say is, for me personally, even though I'm trading really low time frames, sometimes executing on the 1 minute chart, I'm still, my bias is still being defined by the daily and the 4 hour. And the reason for that is my belief is that that's, the higher time frames are where the institutional traders are stepping in, your hedge funds, bits and pieces like that. So it makes sense to me that those highs and lows are going to be the key ones to respect. And that if we're looking for, as we've said before, clear and obvious, then, for me, this high is clear and obvious, this one, this low, this high, etc. Right? On the 4 hour, we can see almost every key high or low that we come into, there's some kind of reaction. Or if there isn't, and just using this as an example, we can see that how well it just underpins price. But see how price is sticking to this, right? Now, when we closed above this would have been a key order block here, right? Price moves up, takes out a high, comes back down to the order block. See this weak reaction in here? Well, this kind of small consolidation that led to this move higher, also this consolidation, we're expecting some kind of action here. So for me, I'd want to see either a strong reaction away. The more we kind of start to revisit it, and you see kind of what happens. We have this big reaction first of all, small reaction, smaller reaction, and then we lose it, right? But when we look at this can tell us a lot. We can see, like literally actually physically see how price is just losing momentum here, right? Set this order block, come above it, tap into it, big expansion higher. Price now comes back down, comes into that, not really that bullish catalyst is there. And actually, as we zoom in even more, we start looking at the wicks, and you can see actually the longer wicks are to the upside. Now, here we ultimately run liquidity below these relative equal lows, on this pin bar candle. So we would be saying here, and my good friend and fellow trader at the Bird Nest, Bast, would tell you that, that going into a key point of support isn't quite enough to get involved in a trade. You have that, which is your bullish pin bar candle. If that's followed by a bullish engulfing candle, you're then looking for these highs to be taken. All right. So this is where the kind of areas of, or typically understood support and resistance and liquidity kind of go hand in hand for me. So there's still key areas to think of where buyers and sellers are. And that's where the liquidity is resting. So the real key thing for us here was looking at the fact that this low here, that was, price is staying above this order block. What happens here is then when price closes below it, which is this candle, it allows us to say, okay, well, where's the next key liquidity lower? We've got this low. And ultimately these relative equal lows down here. Once again, when we zoom in on this, this low here, rebalancing this fair value gap. Price closes below it, right? Look how it's kind of ping-ponging in between these two levels here, just because it's key liquidity resting there, right? Price is then ultimately forced above this, as we said before, in our manipulation move, and then we see price sell off, attacking the lows again, right? So that's a way, because a lot of people say to me, look, I understand the idea and the principles of liquidity and stuff, but sometimes when we're in the chop or I'm trying to read price action, I'm really struggling to kind of get a handle, because I'm someone that likes to see kind of traditional support and resistance. So these kind of principles can be easily overlaid with support and resistance, right? If you've got a really, really key area where you can see prices really just struggling to get below, and even if you're just doing this freehand, right, and you're looking at the wicks on this, right? So if I ever see an area where you're really you've got a lot of wicks, like this, something's clearly kind of price is driving into this. Look at the downside wicks. We then get a bullish reaction here. What happens? We come down, we close below it, and then our expectation is, okay, it's a sign of weakness. Price is driving lower. Where to? We look for our key lows, and order blocks to rebalance. Okay, so the reason that I kind of don't really chart that up a lot is I'm always looking at the high time frame charts to work out where those levels are, right? If you look at amazing traders I've been fortunate to learn a lot from, people like Trader SZ, Trader Dante, who are incredible, the way that they will just look at a chart and they will immediately see where the key buyers are, the key sellers, then they want to see strength above or weakness below, and then that all plays into then what the bias is and for where price is going. what we can then do is really drill into the lower time frames to find these kind of either fractal setups, which is basically a repeatable pattern, or you're looking for, like a little liquidity sweep and then a sell-off, or ultimately a liquidity sweep on the downside and then an expansion higher. So this is all nice and clear here. We're chasing price lower, but at the moment it's kind of on a daily scale. Yeah, so we've taken out there, and now we can see we've had a bit of a reaction. Now, we have some liquidity resting up here and some liquidity resting down here as well, right? Now, for me, if we're looking at our order block theory, we're taking this as the down close candle on a daily scale. Now, when we closed above this here, so the wicks don't count, we need the body close above this, then our expectation is for it to seek the clear and obvious liquidity. So the price swing high, equal highs, basically where's the next liquidity resting? In this case, we would look at these relative equal highs here and look at that as our target on price. Now, at the moment, and especially if we want to look at a little focus on order blocks here, if we're now allowing for these, now when we have adjoined candles here, again, I would always say to people, go to the source of this information as well, or learn off of different traders, their interpretation of order blocks. Some people allow for the wicks, other people for the body. For me, if this is a bullish order block, which is a bearish candle, I'll use this one as an example as well because they're adjoined and because it's cleaner because of this wick, I make an allowance for body down to the base. But for this example, I would also be making an allowance for this candle because that's adjoined here. Now, what we can see here, which is quite interesting, is price has ultimately just closed above this here. So at that point, I'd be saying to myself, and where are we here yesterday? Then if we've got that close above, today I'd be looking for bullish reactions to chase down this liquidity higher, unless price continues to go down. If we get a daily close today below this, so just to signify that that's a close below and also a bearish candle, then we've got clean liquidity targets lower, okay? So there's an element of recency for what we're looking at because I see a lot of people that draw up like every order block, draw up every kind of line, support, resistance, and then just kind of get trapped when it comes to executing, all right? So what we're going to look at now is we're going to leave these levels on, right? And we're going to say, okay, well, maybe the read isn't the cleanest here on the daily. We've taken this liquidity, we're now kind of consolidating a little bit. Next time frame, and probably the time frame I'm putting the most weight onto below the daily, is the 4 hour. Now, excuse me, you'll notice that on here as well, I've got the session breaks on. Excuse me. So all these are, for those of you that don't know, is these grey lines just represent the start of a new trading day. Okay. Now, the reason that these are important are because we have prior days highs and prior days low, which represent key liquidity pools. If we're looking, if people were to say to me, what are you talking about mainly when you're discussing liquidity? I'm talking about mostly clean highs and lows, and that can be previous day high, previous day low, previous week's high, previous week's low, but then also session highs and lows, which we'll look at again when we drop down to the next time frame. But it basically means, for myself who trades the New York session most typically, I'm looking for the liquidity resting above or below London and Asia's session, meaning that those liquidity pools can very often get attacked. However, what I just want us to look at here is how we just overlay the same principles we discussed on the daily, on the 4 hour, just by looking at our order blocks and our fair value gaps, right? So we're just going to start from here. Once we have that sweep. So once we have that key sweep on the daily, we're always asking ourselves, are we going to get a reaction here? If price shows strength, and it falls within our parameters, then ultimately what we're saying to ourselves is that we are looking for liquidity higher up. Now, I've done this here in red because before this candle closed through, we're looking for, when we're in a sell model here, we're just looking for lower prices. Our first indication, or our first two indications, come at the same time here. This is the first one, right? Move that back up to there. This is purple because it's an inverse fair value gap, meaning that this was a bearish fair value gap at first. Let me zoom in a bit more. Guys, also as well, if I'm just leaving this too zoomed out, please just let me know in the chat. I'll always zoom in. Bearish fair value gap, yeah. So we're expecting for this to deliver further downside. Our first indication that it might not is the fact that we've run this daily low. So as prices now run this daily low, within this session, we're kind of saying to ourselves, okay, we might see a reaction. For me personally, I like to wait for confirmation, yeah? So on the 4 hour, there's two things here that make me convinced that we're seeking price higher, okay? This inverse fair value gap, which is only valid on this candle's close. So if we want to put a little arrow on to remind ourselves, that means that from the start of this candle, we're bullish, yeah? The other thing that gives this conviction is here's our order block. Why is it an order block? If we consider it in the most simple terms, it's the down candle, yeah, that is then closed above, right? So that's a bullish order block. A bearish order block is the opposite, right? It's a bullish candle that's then closed below. So for example, this is our bearish order block, right? We see it set here, it's the up candle before price closes below. Then when we retest this, and what we have here gives it a lovely extra validation, is this bearish fair value gap. We then look for price to sell off lower, okay? Quick question here from our friend Wack. Hi, mate. It's triggers for me at key levels. What other examples of triggers do you use to execute when you get to a key level? Beautiful. We'll do a whole piece on it, mate. Let me just write that down. So, triggers at key levels. Yeah, for sure. So actually what we'll do is we'll develop this out on ETH now, and we'll take a look and we'll kind of decant this down onto a point that we're looking for our trigger mechanisms, right? But the key thing for me is right here, when we come up, we close above this order block, yeah? That shows me also as well, look at the strength in the candles, big body candles showing that the buying volume is in the bodies, yeah? SZ said something years and years ago, which I loved, which is small bodied candles most often lead to big body candles. Yeah, small body candles lead to big body candles, right? That's showing basically that the wicks are where price has tried to get to, but the bodies tell you basically where it's been successful. So yeah, Whack, if I do waffle on, as I know I have a tendency to do, please do remind me shortly and we'll dive straight into some execution. But I just want to go through this with you because I don't really cover order blocks a lot with you guys. A lot of differences of opinion on order blocks, whether they're supply, demand, order blocks. You should include the wicks, you shouldn't include the wicks. For me, it's quite simple. I allow for the bodies. So in this one, yeah, bodies to the top of the wicks. Yeah, this is closed above. If we revisit this, yeah, then I'm expecting for continuation higher, all right? And then all we're doing is when we're setting the next ones of these, so we set the order block here, this is closed above, bullish continuation. We set this order block here, closed above here. Where do we expect price to go? Continuation. Okay, so that's what we're doing. Now, where this can get a little bit tricky with order blocks, right, is that you can obviously get to these points where you've got sort of like a slightly deeper corrective move. So I always find it quite handy to make an allowance for your Fibonacci, right? So if we're taking this price leg here, kind of up until we set this low. And now, first of all, right, so let me just drag that across so that's not confusing. That's when we've got this area here. So first of all, we're looking at our principles of premium and discount here, right? Meaning that it's just a range split in 50%. Premiums down here, discounts up here, right? We want to be long from, so discounts down here, premiums up here. We want to be long from discount and short from premium. That's the principle of it. Again, I'd always go to the source of this information, which I learned many years ago off ICT. He's got core mentorship, new mentorships, bits and pieces loaded with information. But that's how, over the years, that's how I developed to use this. I'm looking to say to myself, well, excuse me, do I want to be long here? Maybe not, because ultimately I really want to see price kind of come back down into here. And we can see it does so here, right? The other thing we can do is use our traditional Fibonacci. Again, we can see we've got the 0.5 here, and this is a really key area for me, the golden pocket between the 618 and the 66, yeah, and then the 705. price often likes to kind of dive into these areas, and then you can see quite solid reactions from it. Like you see the price leg, if we extend it up to here, so we take this, the corrective move down, if we allow for this, price comes into this key area here, and then you get that kind of optimal trade entry. Now, the reason that I'm saying that, and do let me know if that was too convoluted, right, is that the thing with order blocks sometimes is we look up here, price comes up, right? So remember, like we did with this candle here, we've set this down close candle here, yeah? We're looking for continuation higher, right? But we don't get it, do we? Right? We don't get that close above it. So now we've done something else. Now we've set a potentially bearish order block, right? Which becomes valid on the close of this candle that closes below this, yeah? So here we would be short. Now, we always need to zoom out and remember our bias. We are still higher highs, higher lows, yeah? We are still delivering bullish price action, right? So what I'm saying to myself here is, okay, I've now got conviction that price is going to go lower because we've closed below this order block, which is showing weakness. Where would it be targeting? And there's two areas straight away that stand out for me, right? There's this bullish order block, which we didn't retest. And there's also this very, very thin fair value gap, which I'll just do in green to just signify that we're treating this as a bullish fair value gap, yeah? It's the gap between this 3 candle pattern and this gap. So when we're here, we've got a counter trend bias, meaning that we're ultimately know that what our belief is that price is continuing to search for higher prices, yeah? But we've had a weakness in the state of delivery here, right? Meaning that, do we just think the price is going to reverse here? Well, we don't know, but we do know two things, right? We know that price could reverse here, yeah? Or it might just be this corrective move. So the reason it's important to understand that is because then when you get into a trade here, a lot of people will they might see this order block violated and all of a sudden they're looking for the swing low as their target, yeah? And the reason that that's a mistake, in my opinion, is because you're ignoring the overall trend. There's strength in this trend. Doesn't mean you can't counter trade it, which you do here, but your target should be the next bullish array, meaning the next bullish fair value gap or order block. That's the most likely place that price has a reaction. So when you trade that, yeah, and we can look at it in here and kind of work this onto, as we were just talking about with WAC, yeah, we start looking at executions and then how we can actually transform this into an actual tradable system. So just to run over it again, we're in a bullish trend. Each day, we're just looking for long setups. Yeah, whatever session you're in, however that treats you, you have to test the data within your own session to know the key areas that you're looking for, right? And also, don't feel like you have to catch these massive moves. Trade management and risk management will take care of so much of it for you, okay? So we want to focus on this area. Ultimately, we're bullish, but we see that there's a corrective move here. So this red arrow, when we drop onto the lower time frame, is going to tell us that from the moment we see this red arrow, we can trade this lower, right? So what we want to see on the start of this red arrow is price draw up, yeah? And then come and attack liquidity lower. We're ultimately targeting this order block via this fair value gap, yeah? So we're just looking in here under this red arrow. We're not necessarily worried about we don't want to see this higher taken. We're already in a sell program here and we're expecting at least a short-term correction lower. So I really like executing on the 5 minute. If you guys would like us to take a look at this on slightly higher time frames, absolutely no problem. We can do that. Just so that you know, the kind of blue lines on here are just silver bullet time zones, right? That's when we expect sort of, we expect, if anything, that we can get a Judas swing, or what's known as a Judas swing at that point, meaning that it's where price comes up, takes liquidity above session highs or lows, and then reverses. But that one is for another time. And again, it's an ICT principle. So I'd always recommend going to the source. So we're here. Here's our red arrow, right? Now, we've got our green box as our target, and we've also got the blue box, yeah? But what we need to make an allowance for here is this, yeah? Is this fair value gap. Because we need to make sure we've got at least a reasonable risk to reward getting down to that before we reverse. So on the 5 minute, we've got here, and let's just put a green line exactly where this is to show that this is where we've stepped in, right? Or actually, let's make it red because obviously we're counter trend bearish. Incidentally, anytime I'm counter trend trading, I'm reducing my position size, okay? Because there is a higher risk element to it. And then what we're doing in here, or what I'm doing is, and I'll teach you a couple of different entry methods, right? So you need to understand, or for yourself, how low you're willing to push the time frames. Because if you're looking for 5 minute with this kind of style of trading down to here, and you're saying to yourself, all right, well, I need to see a confirmed break of structure and a return to a fair value gap, often too much of the price action has taken place, especially when you're counter trending that. Yeah. So you need to get in and out quickly. So red arrow, what do we want to see? All we want to see is price take a high to show us that it's sweeping some kind of liquidity. We want to see a nice upside wick like this. Yeah. So we've obviously got the local high here. Yeah. We've got this high here as well. If we're talking about fractal highs, then I'd be focused on this one. Okay. So again, you've just got the fact that that's the highest high. It didn't violate the first candle's low, and then it's confirmed when that low is broken, right? Now, I'll do a different session on that. It's basically there's different ways to determine highs and lows. For me, you either allow it as a high is just a high that's flanked by two lower highs, and a low is a low that's flanked by two higher lows. If you're looking into fractal patterns, it takes a little bit of a while to get your head around it, but sometimes it can just be helpful, especially if you're building sort of systems, algorithms, or especially bots. Now, we're just going to allow for that high, right? Because we can see here, we've got that price has come up, right? And it's taken out this. Now we want to see price come down with strength, yeah, shifting market structure, which is here. Yeah? So price comes down. Now, something that's really interesting that you can do if you do like traveling down to a 1 minute is when you have these and you want to enter on a 5 minute, if you take the 5 minute on the 1 minute, if you would take the 5 minute candle, and let's just make this red so when we zoom in. So all I've done is we've got our sweep of liquidity here. Yeah. Price has come up. This is then our shifted market structure, our market structure shift. Yeah. Or ICT would call it a change of character. You can see here, I always called it a market structure shift previously. So it's just a force of habit. Now we're interested in what happens within this red box. Yeah. If we go back to here, right, now you might have a trading system that you're happy to market enter when we close below this low, yeah? Ultimately, on a 5 minute, your risk has to be above this high, in my opinion, yeah? So let's say, for example, you market entered on the close of that candle, yeah? On the 5 minute, and then you're always a few points above that, and you know your first target's here. You've got a 1.36R, yeah? Meaning that if price does reverse there, or you move your stop loss to entry at that point and cover your fees, meaning that you're trading risk-free, then is that enough risk to reward for your trading system? And the only way you'll know that is by crunching lots and lots and lots of data, okay? But I digress. That would be our entry there on the 5 minutes. So let's remember that. Just jot that we've got a 1.36 our trade. But if we were to look to refine that on the 1 minute, and before we go on there, I'm going to tell you what we would do. We would highlight this candle, price would come back up, yeah, and in here we're looking for the inefficiency that price can draw into, yeah, and then we're looking for the 1 minute swing high above here to put our stop loss. So, as we can see here, this is the highest fair value gap, bearish fair value gap. So this box is made up of 1, 2, 3, 4, 5 candles, yeah? We've now taken that and we're looking deeper inside that into here. And that's our entry. Now, you can get aggressive and put your stops above that swing higher. Yeah, I normally pick, especially if there's one local to it here, I would normally pick this one. So the reason that this can obviously be a little bit more beneficial is because when you look at your risk to reward here, so we're in here, stops are just a few points above that, and then we're targeting the box. All of a sudden, what was a 1.36R trade becomes a 5R trade. Yeah? Well, almost 6R, really, 5.94. So that's how I would kind of look to incorporate that, right? So let's ping off a replay and let's just pick another section which we will do with recency, right? Because it is, I don't really like kind of cherry picking data. You've got to kind of move here, there, and everywhere on the page, but also you obviously want something that can be repetitive as well. So, is this all making sense so far, guys? Finding this value, or let me just run through another. We'll just look. Let's just look at yesterday's trading, shall we? Yeah, or look at the last couple of days trading. So, what have we got in here? So, if we look at yesterday, then from here, I'm still right. So, let me give you my thought process here. One, we have this inverse fair value gap, right? Price closes below that. Now, the only issue is here, when it closes below here, it takes out this low. Yeah. Now, in doing so, we see this kind of bullish reaction here. So let's just draw that back a second. Now, here, we have our bullish order block, right? Do this in blue. So something else you really want to study with order blocks is very often, like, if you have adjoining order blocks, you need to have a system that says to you, okay, well, when do you stop allowing, for those to come together, right? Sometimes you would, if you saw two, like here, for example, yeah, small bodied candles like this, I quite like to adjoin them, right? But actually, I would just allow for that. These are slightly too big. Ones like this, for example, you see these three in here, right? Basically, when you look at the wicks and that, create the same kind of range. But just make sure that when you're doing testing, you're consistent with it. Otherwise, you will kid yourself when you're using the data. Now, when price closes above here, yeah, this candle here, I'm looking to chase down this higher, all right? Let's just draw that in and we'll make that green, yeah? And let's just put a little arrow in here to say, okay, and why is this? Well, because we've closed above this order block here, yeah? I'm looking for price to run higher, yeah? So then I can look on the lower time frames for that, but I can't look for it here until this candle, yeah? Which is the start of our New York trading session. So now we're going to drop down to a lower time frame. We're going to go back to our 5-minute chart. We've got our high time frame bias. We've got our reasoning behind it. And we're going to implement the same system and see if we get a result, right? So what are we looking for here? Remember what we said. We've got price being supported down here. Our expectation is that from this green arrow onwards, what do we need to see? We need to see a sweep of liquidity and then a shift in structure. And then we're going to mark out that 5-minute candle again. So we can see we get the sweep of liquidity here. Right, and then we can see that we get the shift in structure here. We line this up as our MSS. Now, actually, technically, it's a market structure break because it's coming from a higher low as well. So let's not be lazy. There we go. So where's the candle that broke structure? Here we go, right? And now we're going to do this one in green, right? And remember what we said. What we're doing is we're now looking down into this, yeah? This green box represents where we're looking for the inefficiency, as long as there is one. And then we're looking to then trade that up. Ultimately, our target is this green line up here, yeah? Which we don't quite get to, but again, it's about you going through and looking through the data. This is a brilliant setup, by the way, that I had kind of played about with before a few years ago with an amazing algorithmic and bot building trader that I knew. But I saw this recently. A guy I didn't know, a guy I do know, so he sent me the information, a South African trader who trades this ICT stuff. And I was really, really impressed with the way that he kind of conveyed that. So I'll have a look. I'll try and connect with him and try and kind of share and give him a little bit of love, because it reminded me very much of when we were building these type systems before. But it's just a very easy and mechanical way that's very repeatable. Yeah. So we're going to go to our 1 minute. Now, the key thing for this is when you're targeting the swing low, which is where you want to put your stop loss, you want to make sure that, you've not got any obvious fair value gaps drawing down into that. As in, you wouldn't want to use this swing low, or I wouldn't, just because it's a bit close. You should be getting protection from this order block. But for me, it makes sense to go under here in case price just wants to rebalance this one. Let me zoom in a bit. this one here. So this is about stop loss placement. Remember what we said in terms of entry, we just want the lowest fair value gap in this green box. Yeah. So 1, 2, 3, 4, 5. That's the candles that make it up. That's the lowest fair value gap within it. This is our entry. But I said you could go super aggressive, right, and put it under here. I don't really like that because of that fair value gap that's here. Always a few points underneath. Making an allowance for this, allowing this order block and this one to protect. And then our ultimate target is this. Yeah. Now, again, nice 6.42R trade. Obviously, you'd be looking at things like internal liquidity targets as well. So you'd be looking for how price reacts here. You know, we have a little reaction back off of it. Yeah, which we can see here. Close above it, dip back down, strong, retest, goes up. But then it kind of comes all the way back down here and ultimately doesn't quite have the push to get up here. So I think we're probably looking at a situation whereby, you know, there's a rejection there from an order block. But you can see, hopefully, that by kind of breaking this down on the time frames and using the 5 minute as that, you know, as the market structure shift or break pattern, and then identifying that market structure shift candle, can normally kind of help you zero in on the inefficiency that you need to be targeting, the fair value gap for price to go higher. Now, that said, there's another interesting, obviously there's lots of different entry mechanisms that you can use, right? I think something you might find quite interesting, there's a really good ICT trader called TT Trades. And again, an old guy that I used to study ICT with many, many years ago reminded me of when we were trading this. We used to just call it like an hourly liquidity raid. But basically, when you saw on my chart earlier the silver bullet, let me just tidy some of this stuff up. Yeah, when you saw on my chart earlier the thing labeled as silver bullet, then I'm going to show you how that comes into play and how you can use that on sessions as well, because it can just be a really handy thing to go away and just practice to get yourself consistent data, because you don't really need a high time frame bias for this at all. I'm going to show you two systems now. So let me just go. Right, so two systems. One is on the hourly. And again, do go and check out TT Trades. I have no affiliation with him. I've barely shared any messages with him on YouTube, but somebody sent me a link to this video the other day. I think the guy's an excellent teacher. And also it's really funny because you see a lot of these systems emerging now, which were kind of older school ICT systems that have kind of either been refined or these people do a lot of work on them. But it just reminded me of this anyway, before I digress too much. I'm looking for silver bullet times, right? So you can get this little time indicator. It's free. It's just called Silver Bullet Time Zone ICT. Yeah. So when we're in here, you see these blue boxes? Yeah. Now I don't make an allowance for the London session. I just trade the New York AM and PM, which is 1400 UTC. Yeah. And 1800 UTC. Sorry, Nick, I'd missed your thing there, mate. Do you think that considering high time frame bias outweighs the short term time frame? This is where I doubt myself. Right, okay, yeah. So this is what you want to do, mate. I think. Remind me about this in 2 seconds. Let me show people this system, Nick, and then I'll show you what you want to do with that. Because normally it just means you're over allowing for stuff. And I think what you probably want to do is now just go away and do two things, a daily and a 4 hour, and I'll run through a quick top down for that in a minute, mate. So with here, all I want you to do, if you're interested in doing this, of course you don't have to, but the candle, yeah, before, yeah, the blue box, it will set the blue box on your screen for you, yeah. All you're going to do is mark the high and the low of the candle before, right? So for me, the PM session silver bullet is 7 p.m. 1900. So I'm marking the 1600 high and low candle. For my AM session, the silver bullet is the 1500, 15 to 1600. So I'm marking the 14 to 1500 candle. When you put this on your chart, right, you can just, ping this on here. Now, the principle is very simple. And I won't go over this too much. It's just a little bit of fun. We'll just do this one, and then we'll just do the one before, shall we? Right, okay, so all we're doing here right, is we're just marking this out as a range. Does that make sense? And then what we're going to do is we're just going to pop replay on quickly to just get us back to here. Now, we can execute this on a 1 minute or on a 5 minute. Okay. Let's look at the 5 minute first. This is a system, incidentally, that's tested a lot more on FX than it is on crypto, right? So we have to have an actionable setup within our blue box. The only rules are, that if we run one side of the range within the blue box, we take the deviation and then we trade it to the other side of the range. So within the blue box, nothing gets run. So there's no trade set up here. However, in the AM session, we can see that price ran the low. What do we say about deviations? What's it doing back in the range? You could mark it enter here with your stop below that candle's low, and then you target the high of the previous hour's range. Yeah? Now, if we're to pull this back further, focusing on this one, obviously you would just keep a runner as well, so you can target higher liquidity. This one ultimately works out nice. It doesn't really give you a reason to get out of this trade until it breaks structure. But ultimately, you're looking to trade this from one side of the range to the other. Now, on the 5 minute, I would wait for a bullish candle close back within the range, only after it's been run. Yeah? But if you take it down to a 1 minute, then you would look for a fair value gap entry. Yeah? So in here, you've got the run. You would then be looking for price to break a high. Yeah? And then you would look to enter in one of two ways here. You would either enter from the close of that candle. Yeah, so once that candle closes, that's your entry. Your stop loss again goes below this swing low here, a few points lower. And then that's your target up here. Or, delete that quickly, pretty much the same as the other one. Or you'd be looking for price to retrace to this fair value gap here, which ultimately doesn't happen. Yeah. So now, what you would do is you just go on your charts and you just do this on every single hourly candle that's before the silver bullet times and test months and months and months of data. Now, one of the reasons I don't like trading this system, I think is brilliant for bots and bits and pieces like that, but it kind of puts you out of skew with your high time frame bias, right? And bias, for me or for any trader, is really, really important, okay? So I'll show you something similar, but utilizing kind of our older setup with that. Right, so let's just get rid of all of those. Now, looking at session liquidity, right? So this will kind of play in a moment as well to what we're looking for with yours and it. We're going to do this first of all without any major bias, right? And then we're going to do it with our high time frame bias. And that's when I'll run through that top down to finish off knit for you. So 5 minute chart. Now you can get this little indicator just called previous day high and low. And all it does is it just shows you the previous day's high or low represented over the current day. So in this scenario, we are looking for liquidity in two forms. We're looking for prior day's high or low, yeah? And we're also looking for session high or low, right? So I'm going to get rid of the silver bullet here because actually for me, the trading of this is just done within the New York session, right? Which I don't know if this is maybe a little bit too light for you guys, but it's this blue line down here is the New York AM and PM session, right? This is set to equities, right, which is 1:30 in the afternoon for me. It would be slightly earlier for Forex. Now, all I need for this system is I need to see session high and lows run, previous day high and low run, or equal highs and lows. Yeah, relative equal highs and lows. So New York here, we can see below here, right, we have our relative equal lows. What do we get as we come into New York? Purge of the lows, yeah. So then what are we looking for if we look back to our old system is we're looking for a break of structure. Yeah, we get our break of structure and then we can either highlight that candle break, yeah, remember like we did before, so it would be this candle here, the one that breaks structure. We would highlight that and then look for our 1 minute entry, and then we would be trading it just to the internal liquidity, which is up here. You'll notice you don't always get there, but by the time you're kind of refining this entry on the 1 minute, then it's something that you can do. You can then obviously move your stops up. You can take some profit depending on how risk averse you are and what your system tells you, right? Now, unfortunate really, because if we had taken that higher, that would have been the high of London and Asia. And ultimately, we can see what happened here. We didn't quite take it, unfortunately, but then we broke down here. And once we'd broken down here via that low, we would have been looking for our entry in this fair value gap. Okay, so we're just going to go to the previous day again now. We go to our New York session and say to ourselves, okay, what did we do in New York? Did we run prior days higher? We did, yeah. Did we take out the prior sessions? Absolutely. We've got these highs here. So here, we're just looking for market structure to shift. Right, and again, this is very much going to come down to how you set your highs and lows. If you're just taking a low as, a low that's flanked by two higher lows, then this would be your break here, in which case you'd be looking to enter around on this candle on the lower time frames. Or if you don't like dropping down to the lower time frames, you can just take the candle close. Yeah, so this candle closes here. You can market entry, put your stops above the prior swing high. And in this case, then you're looking for your next clear and obvious target, which is here. Is it over 1.5R? It is. Ultimately, where's our target going to be? Probably down below these lows here, obviously being aware of any kind of clusters or consolidations. So does that make sense, guys? Right? What we're looking for there, we're looking for just key liquidity sweeps, and then we can just go on to we can just look at this on a daily basis. Yeah. Now, my data is very much based around New York trading sessions, right? So we can see for this day, for example, yes, we ran the prior day's low, yeah, but did we run the session lows? That's then the big question, right? And we did. So we see here, there's the low of day. Yeah, we can see that we run this, we break above it, and this one ultimately would have been a loser. Yeah, that was our shift in structure here. This would have been our entry area. We failed to chase higher. And we ultimately came back down, swept twice over the night through Asia before we had our reversal, right? Now, one of the funny things in trading is most people, or a lot of people, are more interested in being right than they are being profitable, yeah? If I come in, I use that setup. If I execute that setup every day, really simple. Have we run prior days high, prior days low? Have we run prior weeks high or low? Have we taken session liquidity or equal highs and lows? Yeah? So as we're looking around here, what have we got? Yeah, we haven't run session high. Yeah, we ran session low. Yeah, we see that. We've taken out that low. Then we come up and we've taken out structure in here, meaning that we're looking to enter in here and chase down the closest liquidity target, right? Which is that. See how we just nip that. So we get a nice little short-term winning trade in there. Now, these over here, yeah, would then turn in. We could look at these as relative equal highs. You've got that high there, which is pretty much identical with that one, and then you've got that one in there. So save drawing a new line. I'll draw those over the top. And when you're testing this, if you want to make it really clear and really simple for yourself, yeah, then you can ignore the equal highs and lows and wait to refine that, yeah, because ultimately this is the move we'd be looking to get involved in. So we've taken out session lows, we've traded to equal highs. We've now had equal highs. We've had our breakdown over here, and we were then looking to trade that lower. We don't quite get down to that low within the session, but ultimately we do take it over here. Yeah. Now, if you've got any questions on that, please do fire them over and I can come back to that and take a look. But just quickly, for a point that Nit raised, just until you get used to it, right, what I would say is one of the cleanest ways, or certainly that certainly helped me a lot with bias. Let me just get rid of all of this. Is using the daily and then the 4 hour. So daily ultimately will give us our strongest bias, but it is ultimately a very long time frame, right? So it will lag. Now, just to be really clear, ignore your order blocks for a moment and just focus on your fair value gaps. And we're just asking ourselves, where is price delivering from? Yeah. So we need an inverse fair value gap or a fair value gap. We see we've got an inverse fair value gap here. And then we ultimately get this bearish fair value gap here, which price has been delivering from. Only when we then inverse, yeah, or change the state of delivery here, just based on fair value gaps. So we would need a close above this. Then we would expect this high to be targeted and then these highs, okay? Until that happens, the moment we set this bearish fair value gap, my high time frame bias is bearish. So I put a thick red line on the chart, yeah? Till you get used to it, it will just help you train your mind in, right? Now we're going to get rid of this because that's fine on a daily scale. We're now going to refine it on the 4 hour. And we're always going to just have an eye on the fact that we know that we're still high time frame bearish, yeah? Now, even with that, if we drop just to an hourly, just quickly, just because you'll be able to see the data a lot. Now, if we're bearish, yeah, from the red line, that means that each day, and again, you need to test this for your particular trading session. For me with New York, what I'm looking for is this. Let me just expand that a little bit. Right? So in each session, and the only reason I got this on the hourly is just to kind of show you a consecutive amount of days. Starting from here, here's New York, right? What do I need to see? I need to see highs run, which we get here, and then I'm looking to short it back down to these lows. Ultimately doesn't happen to over here, but that doesn't matter. And again, comes within your trade parameters. No trade day here. Why? Because price just continues to move up and it reverses in Asia. No problem. No trade day here because price moves up, doesn't reverse within New York. No problem. If I zoom in a little bit more, we can see we have a sweep of some highs here, allows us to get involved. Ultimately, price sells off, right? We come into here. Beginning of the New York trading session is here. We take out these highs, rebalance this FVG. Sorry, I know this is small, guys, but I'm just kind of going through it to try and give you a bit more data. Let me zoom in a bit. So this day, yeah, what's happened? This is the start of the New York session here. We're rebalancing this fair value gap, yeah, and we've taken out this intermediate term high. We've swept that. We don't close above it. Ultimately, remember, our high time frame is bearish. We're short, yeah. What happens here? Do we get it? Yeah, perfect. So this 1400 candle, we can see draws up into a bearish fair value gap. So daily time frame is bearish. When we look for our time, and this is why time is so important, we're just simply looking for it to engage, yeah, with a fair value gap. Just in this instance, we're even going to remove the noise of order blocks, yeah? So our high time frame bias, our daily is bearish. We are just simply, when our New York session starts, looking for price to draw up into a bearish fair value gap, and then we're looking for our short setup lower, okay? What happens here? Do we have a catalyst? So I would say we do. We've taken out the high of the prior day in here, meaning that we're now in here looking for short setups. We ultimately take out liquidity below here. In here, we probably would have got stopped out because we've taken high of day, yeah? Didn't take prior days high, we've taken enough liquidity. And then that probably would have represented on a lower time frame of trade. Ultimately, we get it wrong. But you can see, again here, high of day. What allows us to just be looking for bearish trades here is our understanding of the daily chart, yeah? And where bias is going. But also the 4 hour chart, yeah? So now we want to refine this down further. Just remember, guys, that's all just with that understanding of just using fair value gaps on the daily, yeah? If you then want to overlay that on the 4 hour chart, which is what we're doing here, and let's look at current price action. Well, the reason I think we're getting this reaction here is we've just swept the prior day's low, yeah? So when we're looking for recency, we're always telling ourselves the story of price, yeah? Prior day's low was swept here. Now we're seeing a bullish reaction. Is that enough to get us actually bullish? Not for me, okay? If I'm just using my fair value gaps, right? We have this inverse fair value gap here. We also have this bearish fair value gap here. There's none others in this. So we'll do that in red just to signify that it's our bearish fair value gap. So what we're saying is, okay, we've run liquidity here. Yeah? Now, fine. This was closed above, but look how quickly price then came back below. This is where I think maybe I differ from some other ICT traders. I know a lot of ICT traders would see this violated, close above, would expect bullish price action, as would I, but then would then dismiss that because you've got it and then it's been inverted. For me, if you get an immediate close back below, then I'm treating that as bearish, right? But then after that, this doesn't really mean that much to me. But this is clearly a key pivot point, right? So now what I'm saying is, well, if I'm still bearish, which ultimately I am, I'm bearish on a 4 hour, I'm bearish on a daily, then my setups today, if I haven't got a clear read on the 4 hour, I can drop down to the hourly or the 15-minute time frame. And then I just need to monitor what price is doing in that respect. So, right, we've run prior days low. We expect a bullish reaction here. What's going to tell us that this bullish price action the bearish price action is holding is this bearish fair value gap. If we close above this on a 15-minute scale, then I expect us to reach for these equal highs. Yeah? If we keep violating, bearing in mind, these are bearish fair value gaps, right? These should be rejecting price. If they don't, yeah, we get this balanced price range, bearing in mind that we're also making at the moment, which we can see in here, bullish fair value gaps. Then for me, this being respected, this being closed above, means that we can look to chase down that. Obviously, if we can get an entry, yeah, we've got about a 33% move there. So you would be paying some higher fees, but you can sit there and you can still scalp that move higher, or certainly have that as the point that you move your stops to entry, okay? So what I would say is, if you want to really, really zoom out, get onto your daily. Zambuca, 1977. Hey, buddy. It's all good. It'll be on recording, my friend. If you've got any questions, you can always reach out to me on Twitter or through the Nest. So should we just close up just by doing a couple of quick examples? And Nick, what links did you want? Sorry, mate. So looking at our FVGs, and you can get indicators, right? Hang on. What are they? It's called fractal break imbalance FVG. If you put that on, all these little boxes show you fair value gaps. So if you're basing your bias purely off of that, let's just work back very quickly from where we are here, right? So at the moment, bearish fair value gaps are being respected. Yeah, bullish fair value gap is being respected here. So we've actually had quite an aggressive flip here. Yeah, because when we set that one here, we were actually bullish from here. And we see actually price reversed on us pretty quickly and then got us back into a bearish state of delivery. So now we're looking at our fair value gaps, and all we're asking ourselves is, are these being respected? Yeah. So what we can see here is this bearish fair value gap here is closed above here, right? So let's actually draw this one in. Yeah, so that should have been a bearish fair value gap. Price boomed up above it, right? Meaning that it then becomes an inverse fair value gap. Now, I'll tell you the reason as to why we wouldn't be looking to long this is because we've taken key liquidity here. So always remember, you're asking yourself, or I'm asking myself, two questions. Where's price delivering from? Yeah. And have we taken an old high or an old low? Yeah. Okay. Yeah, no, really good question. Yeah, hit me up. I will. I really don't know, mate. I've just got I was introduced to him a little while ago. Really nice dude. I think it might even be YouTube or whatever. But if you type in YouTube TT Trades Trading or something like that, you'll see the guy. Really, really calm, really good explanations. Just kind of decants the ICT stuff into kind of more, easier to digest chunks, if you like. So if this candle had closed here, our expectation would be for it to take out this higher. Yeah. But it doesn't. So then we're in a state here where we've got nowhere for this to run to. If that candle had stopped here, we would have been targeting this high and then this high. Unfortunately, on a daily scale, this expansion was big. And what do? We're asking ourselves, have we taken an old high or an old low? And we've actually taken two here. So we're expecting some kind of reaction, a catalyst back in the other way. Now, I think in future sessions, I'll show you how we can utilize order blocks as well, right? But ultimately, we're just looking to get in on the lion's share of the trend. So this is a really good example because we've taken out these highs now, so it's very, very difficult to go bullish here. However, we would either need, if we're allowing for order blocks, we'd either need a close below this OB. Yeah. So which we get here. So then we're ultimately bearish from here down. All right, and actually look at the lion's share of that trend. You were trading that every day. So from 23rd of July through until the 31st of August, you would have been short every day. Look how many of these days would have worked out with price coming up. And look at this. If you'd caught any piece of this, that would just be a month making trade, all right? But if you don't feel comfortable with the order blocks, then just look at using the fair value gaps, right? And that's why I'm saying if we get rid of that for a moment and we look at our last real key point here, yeah, and this is why I like using these 3 times. So I don't know if ICT teaches it this way because I haven't taken any of his new course material, which is why I always recommend people go to the link. I did the very first course with them, all right? But you see this bearish fair value gap. Close above it becomes inversed. Now, I don't know what other people choose to use this at, but for me, like I said, if the first point we get back to it, and if that happens within a relatively quick period of time, I don't want to see it all the way over here, then we close below it. There's no other obvious fair value gaps, but there is, as we just had on the chart, this bearish order block. Then do you see how we've just got a little bit of confluence here as to what's suppressing price? And then we catch this whole move. Now, you can do this on the 4-hour as well, expecting the fact that you're going to get just a little bit more noise, right? But ultimately, when we look at this, it catches these lovely moves like this, especially when you're looking at the inverse fair value gaps, right? So that was a bearish fair value gap. We inversed it here. We then created this bullish fair value gap here, which we'll do in green, which then gave us a launch pad for price to attack higher prices. They were our equal highs that would have been our target. What then happens? We're then looking at this bullish fair value gap to be respected and rebalanced, and price to then attack these highs here. Yeah? Fair value gap here, price comes down ultimately into the order block, and then we attack prices here. We then change that state of delivery when we close below this inverse fair value gap. All right. So look, I hope that makes sense, guys. Let me just have a quick look. Actually, I'm sure I can find it. Let's have a look. TT. Yes, TT trades _EDU. So exactly what Nitpar has on here, I think. There he is. Yeah, so like I say, it's, all ICT traders will be kind of singing from the same hymn sheet to a degree or another. You have people like me that kind of go away from that side of things as well and look to kind of just get a broader view of the market and traditional markets. But ultimately, my systems are based heavily in that kind of core criteria. This guy, who a few people have sent to me recently, I really like the way he does his videos. I think it's very, very, very calm, very well structured. He will have new content, as in the new core mentorship, which I haven't done. A lot of my stuff is based on his original mentorship from many years ago. But someone like that, I'm really, really happy. I don't know them. I have no affiliation with them, right? But I'm happy to kind of suggest them because I find their content really good. And I think if people are interested in ICT methods, then that's something that could be helpful for you as well. All right, guys. So look, I hope that's been helpful this session. Again, really sorry about the technical issues. I will, let me just think next week. Yeah, we've got Monday and a Wednesday next week. So let me know if there's any bits and pieces you want to cover, or maybe you want us to kind of go out and go a little bit deeper into order blocks, yeah, and how we can use them and align that with our bias as well. But all that said and aside, it's been so lovely to see so many of you on here as well. Obviously, lovely Kelly Barker all the way from New Zealand as well. Erica, great to see you on here as well. Clout dived in to just give us a little laughy face, so hopefully that was something positive. We got Knit and Whack, obviously all the old school soldiers that are on here. Sambuca 1977, great to see you back in here as well, mate. That was absolutely massive. You're all very, very welcome, and I really, really hope that you have a fantastic week ahead. Trade safe. Remember, we've got some red folder news events this week, so do be aware of those. That can really inject some volatility into the markets as well. All right, guys, wishing you all a fantastic week, and we'll get back to our normal routine next week from Monday.